The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 8th terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a great holiday weekend, a nice little long weekend. Hopefully you had a long weekend out there. Great to be back with you. Let's make sure that we do everything we can to have an extraordinary day. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right, folks. You and I, when we make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to throw our way. Of course, today, we're going to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go try to figure out what it is that they're communicating to you and I. We can take a look at multiple time frames, anything that you'd like. The reason is because I'm absolutely grateful for your presence here. Now, I'm here to serve you. So feel free to pick up that phone and dial on at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Turnaround Tuesday. We'll call it Turnaround Tuesday. Of course, it's Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 278 points. She's trading at 16,830. S&P's up 30 points at 1951. NASDAQ Composite up 81 points at 4765. Russell 2000 up 20 points at 1156. The DAX closing out at session up 162 points. She closed out at 10,271. The FTSE up 72 points at 6146. We've got gold up $2, silver up 21 pennies, light sweet crude back 63 cents. Where do you want to begin? Where do you want to begin? Okay, let's see. Let's figure out. Let's go take a look at the NASDAQ. Let's take a look at the NASDAQ. We'll take a look at a couple of different time frames out here. Let's take a look at the NASDAQ because I think this is important for us to be paying attention to. Why? Well, if we take a look at the most recent bottom out here, that was back on September the 4th, I believe. Let me see here. Make sure I got the correct date. September 4th at about 8:30 in the morning. We had price doing what? We had price moving lower with less relative weakness out there. That's in essence, that's the little black area. I'll go ahead and squeeze it on in here. That's that little black diagonal line you see at the bottom of my screen. And then at the 10 o'clock session, as that came to a close, nice bullish reversal signal. 3-candle reversal signal. That's called the three-river morning star pattern out there. That said, there was good support down at the low of that candle session at 9:30 in the morning. Now, as prices were moving and grooving to the upside today, guess what they did at the time frame here of 10 o'clock this morning? At 10 o'clock this morning, we saw price moving higher inside the NASDAQ with less relative strength. At the bottom, less relative weakness. Never a good sign. Now, in the case of the NASDAQ moving higher this morning, what we haven't seen is any kind of bearish reversal signal. I have to really stitch a bunch of things together in order to try to see that. So we have not seen, we're at the bottom, we saw the bullish reversal signal. Up at the top here, we haven't seen that. What does that mean? It just means we have a non-confirmation confirmation. How do you like that? If we also take a look at what was also going on since that low out here that came in at 9:30 in the morning, because we're using that low to begin our wave count out here on September 4th, you can see the market made it to that seventh wave to the upside, singing in the key of G, just like Stevie Wonder before the show started today. So you've got two reversal patterns to pay attention to. Now, both sides of the trade is what it is you've got to be paying attention to. I can make the case that here is a short side of the trade. Worked at the bottom. We're looking at a 30-minute chart. No reason for it to not work at the top, with the exception of no reversal signal. I feel much more comfortable. Much more comfortable. What the heck kind of grammar is that? Well, you can tell I've just simply not been talking for the last 4 days. But if we do take a look, I would feel more comfortable if we did see a bearish reversal signal. Nonetheless, price is also trading below its TAS market profile for the 30-minute time frame out here. Still, for me, I don't have the full confirmation that I would like. Now, here's the cool thing. But I can absolutely see why someone might take the short side of this trade. Likewise, if you get above this morning's high on the NQ, the number to be watching is going to be 42.91.50. You get above that, this whole thing recycles, things move to the upside. That's the message of the 30-minute chart out here. If we go take a look at the 120-minute, it's going to support both the bullish and the bearish case out here. That's what you've got to do before you enter any trade. And if we take a look at coming off of this high back here at about 12 noon on August 28th, so we get to step things back just a tad, and you take a look at a little descending trend line. That's the red diagonal line going across my screen. We can also see that as price was making that high with less relative strength this morning, as it was making a seventh wave on the 30-minute chart, two patterns to be paying attention to that would tell you there's a potential for a top out here. Guess what price was doing on the 120-minute time frame? Running right smack dab into resistance. Now, if I saw a real bearish reversal signal here, which we did during the last 2-hour time period, that came in at 12 noon. So this next one doesn't complete to the end of the show. If there's some follow through to the downside, that would give you some more impetus that the market is saying, hey, I'm extended for the time being. It's run into resistance. Those are really significant resistance levels to be paying attention to. Likewise, the 30-minute takes out its high. What will happen here on the 120-minute time frame? It'll also take out that descending trend line out there. That will say you've got more upside potential inside of the market. So that is the message of the NASDAQ as we speak at 1:13 in the afternoon. If we go take a look at the S&P 500, let's go do that. And then we'll take a look at some daily charts, things of that sort. Inside the daily chart, whereas the NASDAQ gave you that move to the upside with less strength out there, we haven't seen a confirmation in the S&P futures contract. The S&P futures contract, no price relative strength divergent pattern, no seventh wave to the upside, running into a little bit of resistance at its TAS market profile high, which was set up from a bullish standpoint. This was at 7:30 this morning. Once it got below there, that had to make you say, something to think about. Nonetheless, I don't see anything else at this standpoint here that gives you the a significant reversal sign. So what does it say to us on the 120-minute time frame? Well, you're going to see really the exact same pattern or a similar pattern. We take a look at it, you're going to see that descending trend line out here. That descending trend line beginning, I believe that was also on the 28th. That is on, August the 28th. And you start here at the high. That was at the 515 close, looks like. That was at about a price point of 1990.50. And you just simply use your next touch point out here, the 12 noon time frame on September 3rd. Price stopping this morning right smack dab at that resistance line. How does that work? Well, how it works is I'm not the only one who has taken a look at that level of resistance out here. If you were looking to sell the market, that was a opportunity here this morning. Now, inside the ES Mini on its 2-hour chart, you did get a bearish reversal signal. We did also get some additional follow through the downside at 10 o'clock this morning. But what it hasn't done is not broken below its TAS market profile low out there, which is really set up. If I take a look at the light blue line, chartreuse, I suppose that's a color out there. Is that what that is? 1951.70 is closer to the bottom of the box versus the top of the box. That says that really you've got more support. And we know we've got resistance. We certainly do that. But you've got pretty strong support at that 1945.50 level. That's an area that you want to watch. We'll call it 1942 for the sake of something in giggles out there. And if you see it close below that, then the message is a little tricky out there. Could be a little dicey for the market. So that's what's going on inside the S&P futures. That's what's going on inside of the NASDAQ. Now, let's go take a look at the Russell 2000. We can't forget this. Most people do, but not you and I. What was Russell 2000 on its 30-minute chart doing here early this morning? Well, one, it was completing an A to B equals CD pattern. And that's the A to B equals CD pattern that was coming off of the low back here on September the 3rd, I believe. Was it September 3rd? That's when it made its low out here. It says I've got to do something. No, don't do that to me. We're on live air. Participate. Oh, man, twice. Let me see if it does it this time. Yeah, September the 4th. So you see a nice little A to B, 1-to-1 A to B equals C. That a waveform out there that completed 1157.50. We saw price spike a little bit above that area. Now, inside the Russell 2000 out here, as price was moving lower at the time frame of 10:30 this morning, notice that it formed a nice little hammer candle out here after a retracement, and really right at the bottom of its TAS market profile. So that level held as support out here. So the Russell 2000 is something that you and I absolutely want to be paying attention to. Let's go see what its 120-minute time frame chart is communicating to you and I, because from weakness, can you and I find strength inside of the marketplace? My answer is yes, we can. So remember, we looked at the ES mini, we looked at the NQ, we saw that descending trend line out there. And the Russell 2000 and the Dow, those are the two weak links inside the market out here. But take a look at the Russell 2000, what it's done. It's actually held, it got above, and has held on a test of its descending trend line out there. We saw price move above it at about the time frame here this morning in the 4 a.m. time frame. We saw price come back and test it at 10 and reject that level at the 12 noon time frame. Price here, I don't see anything that's it's above resistance. So, the next level for the Russell 2000 to clear, if it's able to clear it, is going to be that swing point out here from a trading session at 12 noon. That was on August the 31st. The key level here is going to be 1165.50. You see the Russell 2000 closed above 1165.50. The NASDAQ above that G level out there and that descending trend line. The markets are going to move higher. It's just as simple as that. For how long? I can't tell you, but they're going to move higher because they will have broken above resistance, and you and I are not going to be the only ones that actually see that out there. So right now what we know is we've got actually the Russell 2000 against everything else out here. So what you and I should do is probably our next step is to go take a look at what's going on inside the ETF structures out here. But before I do that, let me just type in my 22.9. Let me just type in my volume right now. That way we can get some type of volume characteristic. That's assuming that I can type here. The IWM has done 15.7 million shares so far. The SPY's 53.1, and the Dow Diamond's 3.9. We'll call it 4. Or I would just call it 4 even Steven out there. So I've done 4 million. Now, what you and I want to focus on and pay attention to, let me switch over to a different panel out here, is what's going on as these are moving towards or entering into their swing points out here. And so we're going to take a look at the Qs to begin the session. Now, what the Qs are doing is they're really going up against the swing point here from August 28th. Now, August 28th, if you watch this on TigerTV, you can see the volume there, 49.9 million shares. Now, just straight line math out here. What it says is if the Qs do the same type of straight line math during the next few hours as they have during the first 3.5, they're going to end up with volume somewhere around, oh my goodness, what did I do? I typed in the, that's a strategic pause out there. I overwrote the formula. I'll tell you what they're going to do as soon as we get back from this wonderful commercial break. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Restored that little spreadsheet of mine just to give us that straight line math. Doing two things at once out there just simply messed up. But now we're back here. And we take a look right now, volume inside the QQQ ETF series, 23.3 million shares. Now, what the Qs are trying to trade into, are the August 28th swing point. Now, the low on that is 104.85. So far, the high today has been 104.83. So you're coming into the swing point. You haven't actually touched it. Now, volume today inside the Qs, as I say, 23 million shares. If we do the straight line math, says that the Qs would end up somewhere around 42 million shares. So light by about 7 million out here. And anything can happen during the next couple of hours. Typically, volumes here from a straight line standpoint are a little bit off. Let's say they are a little bit off to the upside out here. So it looks like the Qs, they're moving higher. Now, the volume here that it's also going into was about 45 million shares back on the trading day of September the 3rd. So the Qs have got lighter volume coming into that swing point. I haven't tested it yet, but and we took a look at the NQ, so we know where resistance is there. What does that mean? Look, it means the NQ's got to break through that level out here, or we've got that wave G. It just means you're going to start to see a move to the downside, a retracement. Inside the QQQ series, that says that price could easily get down to the 99.56 level. That is its message. You break out above that descending trend line, means a whole different, well, then it says that you at least ahead for the swing point in the Qs, somewhere between the low of 104.85 and the high of 106 out there, before it provides any of us with additional information. If we go take a look at what's going on inside of the IWM, the Russell 2000, we looked at what was going on inside the futures contract. Well, if we take a look at what the Russell is doing today, it is trading into the August 31st swing point. Q's was August 28th. Russell is going to be the August 31st. Let me get my little data box over there, easier for you to see. Now, the low on that was 114.76. Volume there, 29 million shares. So far, what you have done is 15 point, what did you do? About 16 million shares. That gives you a run rate of 29 million shares. So the IWM, the Russell 2000, is moving into its swing point with similar volume out there. If the Russell closes inside 114.76, you're 114.88, expect the Russell 2000 to go tag the top of that swing point, 115.98. If it takes it out, you're going to see an A to B equals CD to the upside that would form inside the Russell 2000. What it would first have to do, though, is clear resistance. Now, pièce de résistance inside the IWM is going to be the 117, what is it, about 117.65 to 117.50, so right around there. That becomes really strong resistance in order for the IWM. If you can crack above that, then we've got to take a look at the Russell actually being able to make its way up into about the 120 type range out there. So the Russell moving into its swing point with similar volume to what that swing point has out there. So that's a good positive message. But Russell 2000 is not going to lift the boats higher out here. If you go look at the SPYs, right now the SPYs, they've got volume of about 54 million shares. That gives us a run rate of about 99 going into 160. So the S&P 500, the SPY out here, has not gotten to the swing point low of the August 28th session out there. By the way, that low is priced out at, there we go, it's the 197.92. What we know about the SPYs here is they've come right back into that little point of control, a little dotted line on my screen out here. That's where they found some comfort. Some southern comfort, if you will. What we wanted to see, what the SPYs are going to try to do, or the ES Mini is going to try to break above that trend line out there. If it can't break above it, then prices could truly move lower. They could start moving lower in earnest. So we're at a kind of a precipice time frame out here. We may not see it today. It may be in the early morning trading before we actually get a good glimpse as to what the markets want to do out here. But nonetheless, we know the SPYs are moving higher with light volume. Even if we take a look at the most recent swing, if you will, the most recent candle that's moving into, that's got volume of 152 million versus about the SPYs today going to do about 100 million, 99 million, somewhere around there. So we got light volume inside of the SPY. And, you know, vacation is over. Everybody is basically back to work, or at least you and I, we're back to work out here. If we go take a look at the Dow Diamonds, get a feel for what they're doing out here. Dow Diamonds trying to get into that swing point from the August 28th session. The low there, 165.25, 165.24 to be exact. The high so far today, 164.43. So we haven't hit it. That swing point, by the way, has got volume of 6.3 million shares. Is that right? No, I'm sorry, back on August 28th. The low there is 165.24. That's got volume of 8 million shares. Today, you could do about 7.5 million shares. Not too bad. Got a little expansion going on. It all depends on what the next couple hours are, but still a little bit light and has not made it up to that swing point. Steve Rhodes with TFNN. We get back. Let's go take a look at the Summation Index. Let's go take a look at the VIX and anything else that you'd like as well. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 274 out here. So let's go take a look at the message inside of the summation index, inside the price oscillators. We now, across the board here, buyers have control of the market. You didn't need me to tell you that. You know what the market's mean up. But you sort of did, because we've seen the Dow move higher with some pretty good volumes, but it has not been able to get its price oscillator up above zero. When you get above zero out here, depending on what takes place in the next session, gives you an idea as to who has control. So if if in fact we close out right around here today, tomorrow, price oscillators back below zero tells you that buyers really never had control. Now, those descending trend lines just on the 2-hour charts, they also help us to identify lines of resistance, which in the case of the IWR, the Russell 2000, is now acting as support. If we look at the NASDAQ, let's take a look at the NASDAQ here, composite. What you're going to see, price oscillator reading of 38.75. That's above the last time the oscillator was up at the level here of 24.28 on August the 28th. Remember, we're taking a look at August 28th swing point out here. So that's a positive sign. Now, look, this move here, let me pull this back just a tad so we can go take, oh, here it is. It's right here in October. If we take a look at the October low out here, this coming off of the low here from 2 weeks ago back on the August 24th trading session, nowhere does it even come close to matching what you and I took a look at during that Ebola scare to the downside. So we've seen a oversold bounce. Now, the oversold bounce can go on for much longer out here, but we haven't seen that kind of major bottoming pattern that you and I saw back here in the October timeframe, when that price oscillator had an opportunity to just really to work its way and create a nice little bottom out here by moving sideways where price was moving lower out here. We don't have that situation, but because we do have a rising oscillator, because it is above the August 28th, even though price is not above the August 28th time frame out here, that does say that price can move higher. Now, if it gets above 65 out here, that message will be that moving higher can go on for a lot longer period of time than one might imagine. It's not there yet. What it is telling us, because even on Friday with the moves lower, the NASDAQ's oscillator was not able to get down below the zero standpoint, the zero price point out here. So it was telling you that we had this little confrontation between the NASDAQ, which I'll be on Team NASDAQ all the time, versus Team Dow, which was moving lower, or Team New York Stock Exchange. I'll choose that because that's going to give you the better signal than the Dow is. Nonetheless, the Dow up above zero, so it's joining its brother and its sister out here. But it hasn't, what it's going to do is target the August 28th area. It should target the August 28th. But, of course, we know the resistance that's out there. It's got to clear those resistance levels in order for that to occur. Inside the New York Stock Exchange, we're also seeing a nice little rising price oscillator. We'll see what it looks like at the end of the day. Still very much a struggle for it to get back up to the August 28th swing point. The low there is 10,180. The high is 10,256. It's not, it's not threatening that level as we speak right now. Nonetheless, it is still the buyers in control of the New York Stock Exchange. In fact, their message, because on Friday, that price oscillator got just down below the zero level out here, tells us that the sellers really never had control of the market. Just the opposite of what you and I just looked at inside of what the message could be in the Dow out here. So the wider swath of the market, NASDAQ Composite, New York Stock Exchange, says, hey, it's still not over. Says it still wants to rise higher. It wants to convince everybody that the market has put in the normal October bottom, that it's put it in the month of August out there. That's what it's trying to do. And maybe that's at what time the market unleashes its power to the downside for a long period of time to come. That doesn't mean that we don't have significant rallies and or bounces, but I believe that's what I'm anticipating the market is really trying to communicate to you and I. If we go take a look at the VIX out here, and let's go back and take a look at the 2007 time frame. If you take a look at my cursor right now, I'm actually back at the trading day of September 15, 2008. Now, the blue lines on my screen, the little red dashed line, the upper panel of my screen, that is the VIX index with a Bollinger Band settings set at 50 with one being the standard deviation down here. Now, it's a great tool to use, really great tool to use out here. What I want you to notice, and then we'll fast forward to what it looks like today. And I probably should have done, can I do that? No, I'm not going to do it. Well, shoot, it's our hour together. I guess I can do anything that I want. I don't know if you want to see me making. I'll just express to you. I'll explain to you what it is that you're looking at. I was thinking about doing is trying to have the 2008 period so we can look at that versus where we're at today. So, but I don't want to waste your time, our precious moments together, by trying to put all that together. And here I've just been blabbering. Look, here's the deal. I want you to watch the 50 to 1 Bollinger Band read. I want you to watch what has occurred back in 2008 as the VIX got above the upper band out here. And it stayed above the upper band out here. Now, I'm taking you back into the September timeframe in 2008. We're not going all the way back to its high out here back in what was in 2007. Just keeping you posted right here because this is what we're really looking like at this stage here. Now, this was in essence the the beginning of the last move to the downside inside of the market, but it's still nonetheless with regard to the way market behavior is. You see, price here inside the VIX never really got back inside the upper part of that Bollinger Band. Once it did, the first thing that it did was it came down to that red line. That red line is a 50-day smooth moving average, so it's a little bit different than the exponential moving average. Obviously, but price came down there and it found support. Normally, when you get inside that Bollinger Band, you come all the way back down to the bottom. What does that mean? As it moves back to the bottom, the markets actually move higher out there. Now, if we take a look at, here's what it looks like right now. What I want to do is flash forward to where it is that we're at today, because you can see the market here in this time period. Let me just go ahead and draw a square out there, just so it's really clear to everybody. And it happens to be a blue square nonetheless. And you can see here, if we take a look at the blue square inside of the market out here, you can see the type of decline that was out there. Now let's go fast forward to where it is that we're at today. Well, that didn't look real good. There we go. Now I want you to see, and we're going to try to blow this up on our screen out here. I guess that's about as blown up as we can get. So what do we have? The same kind of pattern that's in place here, where the VIX index just simply blew through to the upside above the bands out there. So truly stretched. But here's the interesting thing. On the bounces that we've seen inside the market, on the pullback inside of the VIX index, notice that it continues to hold that upper band, just like it was back in the 2008 timeframe. It's really critical. Now, as I was saying, if in fact we see the VIX index, the cash VIX index that is, close below the upper boundary line out here, that's priced at about, looks like around 25.40 something. Can I give you, let me see here if I put my data panel up, that might help me out a bit. The upper band is actually at 25.03. There we go. We got the exact number. And you got the VIX trading at 25.53. Now, here's another deal. Here's another thing for us to look at. If the VIX closes below 25.03 today, what that signals to you and I is that price is likely inside the VIX going to move back to about the 1795 area, the 50-day smooth moving average, simple moving average out here. And that will go ahead and put some impetus, some input, some momentum into the markets moving higher out here. Likewise, if this area holds, it's really like that September 2008 timeframe out here. So it's another element for you to be taking a look at, as a pattern recognition specialist out there. So this is also an important chart for us to pay attention to. Okay, so now we've covered the VIX index, we've covered the summation index, the price oscillators, we looked at the ETF structures out here. I see some comments about gold inside the Tiger's Den. Let's take a look at a couple of interesting things here inside Goldilocks. We pointed this out on Friday's show. Now, on Friday's show, we were taking a look at how gold had come back to support, and it had held support. So you and I went down to some lower time frames to just try to understand, hey, what's gold doing out here? Because it's acting very quiet. And one of the things that it was doing was it made a nice little hammer candle here. This was at 2 o'clock, so as we came into Friday's close of the show, the Trader's Edge show, we had a nice little hammer candle that had formed. Then you had a nice little bullish engulfing candle. Both those are potential bottoming signals out here. Now, you're only down to wave number 6 as we take a look at wave counts. We don't see any price relative strength weakness pattern down there, and price has been unable to close above its TAS market profile high. We've just seen a bit of a bounce out here, and that market profile high right around the 1122-ish type area. It's kind of hidden, and I don't have my data panel up, but somewhere right around there. You can see that little dashed red line that is on my screen out here. So you've got the potential for a bottom on the 5-hour chart, but you've also seen it run into resistance. But the low here from the trading day of Friday, which was on the 5-hour chart of 1114.70, that must hold out there. You close below a hammer candle. If you're long, you're wrong, is the expression out here. Now, the reason why I also say that that must hold is because if you and I go take a look at the December contract, and we look at it on the 2-hour time frame, what we are going to see is voila. The voila being that price had moved down to that 7th wave session out there. See that little G, just like we saw here up at the highs? Went up at the highs, was making that price relative strength, the weakness pattern out here. Little bearish reversal signal, follow through on the next session out there. Price moved lower into last Friday, where it had made this nice little 7th wave structure out here. Again, even on the 120-minute time frame chart, gold is having a difficult time of being able to clear its TAS market profile out here. So that low that you and I looked at on the 5-hour chart, well, guess what? If it takes out that low on the 2-hour chart, which would be the same thing, price point at 1114, what was it, 1114.70 out here, this whole thing recycles to the downside out here. So gold not having a ton of movement to either side. It has an important low that if it gets taken out, it spells curtains. I don't know what curtains actually means out here. Let's go actually find out. Let's go take a look at a daily chart now for the gold contract. If we take a look at the gold contract trading 1121.40, when we say curtains out here, curtains means that it moves down and it at least tests the August 18th low, which was at the 1108.50. You break through that, price can easily move back into the 1094.30 area out here. So price just kind of moving and grooving in between its daily market profile, quite frankly, which is priced out. Let's go put this over here. It's priced out between the level of 1114 to 1126.90 out here. So the 120-minute, the 5-hour chart, you know, they're saying potential bottom, but we haven't seen exactly any kind of move higher with any kind of momentum to the upside inside of Goldilocks. Now, with regard to and with regard to that, you haven't seen much in the way of movement with regard to the mining equities. You've got Rand Gold back 38 cents, Agnico Eagle down 14 cents, Gold Corp off 7 pennies, Goldfields down 6 pennies, but FCX is up 63 cents. Why is FCX up 63 cents? You know the answer to that before I even ask you that question, don't you? Or before I answer the question. Yes, the reason that FCX is to the upside, because we've taken a look at this before, it's that correlation with regard to the Australian dollar. Now, the Australian dollar needs to get above 0.70942 post-haste. Why do I say that? Now, here's the daily chart out here. Nice little reversal signal. Here's your 3-river morning star pattern saying that low out here from yesterday inside the Aussie dollar. That's going to give a price point of 0.69 out there. If price breaks below that, price is going to go run down to 60 cents. But you're seeing a move inside FCX. What I have contended, what I have shown you every now and then, is when we take a look at FCX, somebody asked me to take a look at FCX, you know that what you and I do is we go take a look at what's going on with the Australian dollar. Because if you trade one, you're really trading the other. In fact, my opinion is if you trade FCX, you really are just trading the Australian dollar out here. Because if it's tango, two-step tango, it's dance out here. That's why you're seeing FCX move to the upside out here. Now, with regard to FCX, if we go take a look at any kind of volume behind it, get a feel for what's going on there, you've got 27 million shares. Now, FCX did have a nice move a few days ago, back on the trading day of August the 27th. That had really good volume off of the bottom. Is that a signal that the Australian dollar is off of the bottom two out here? That had volume of 107 million shares. We saw price pull back on light volume, pulled back with 36 million shares back on September the 2nd. Today's move, 27 million shares to the upside, and that's going into 110 million shares. So this is kind of interesting here because maybe it's the tale of two cities out here. Excuse me while I take that little swig of water. And if we take a look at it, the FCX is moving into the swing point from 828. That has 110 million shares with only 27 million shares. That's not how you like to see a swing point get taken out. Nonetheless, if the Australian dollar has hit a bottom, let's go back to it for a moment. Let's change it from the daily chart to the, so I finished that thought for you, to the monthly chart out here. What you're going to see is that in the case of the Australian dollar now, you see that nice little trend line off the low from 2001. That becomes your touch point. Your next touch point out here is October 2008. And you can see that little green trend line was broken. And what the Australian dollar needs to do is not just get up and test that trend line. It's got to get back inside to say that the break to the downside was a false break. Now, when I say false break, I just mean below the 0.786 retracement level. If all price does is get up, bang its head into resistance like we've seen inside the NQ and the ES and the YM inside the Dow futures earlier this morning, and then find that area of resistance, price will resume lower, just as will happen inside the markets out here. However, inside the Australian dollar, what this tells us is it is curtains, and curtains here takes you back down to the 60-cent level, and that's the low back in the 2008, 2009 timeframe out there. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Canada.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 307, S&P 35, Composite up 92, Russell 2000 up 22 points out here. So you haven't taken a look at the ETF structures inside the S&P 500. Let's look at a couple of them. Let's at least look at the top three from a weighting structure. You got the XLK. Of course, it's not going to show us much anything much different than what we looked at inside the SPY. At least I don't believe. The XLK August 28 swing point, the actual low on it is 40.13. The high so far today has been 40.05. So you're underneath that. That's got volume of 13.8 million shares. You're at 5 million shares. No way. So it's coming into that level. Light hasn't tested it. So it says prices can continue up and try to test that swing point. Inside the XLF, the financial sector up 42 cents. That's with 19 million shares. It's a swing point. Looks like the August 27 high out here. Now the low is 23.28. You've been up as high today as 23.15. Volume there is 78 million shares so far today, 19 million shares. Mega light volume inside of the financials. Inside of the healthcare sector, XLV out here. The swing point is August the 27th. The low there is 70.69, 18 million shares. You've done 5.3 million shares. You're not even close to the swing point. Well, I take that back. The low is 70.69. The high today has been 70.13. So what does all this mean? It's an excellent question. Quite frankly, I'll give you the bearish case. The bearish case is that you come in tomorrow, whatever time you wake up, and you see that the market is down, and is down kind of in a large way out here. What's a large way? We'll just say in today's day and age, you got to get the Dow futures down about 200 points, 250 points or so. And that it then continues to have emphasis to the downside. If that's the case, then today's high is the last time you will see this high, and the markets will move down through next February to April out there. That's how serious of a market it is that we're in. Now, I can also make the case that if, in fact, these trends are able to be taken out, these trend lines out here, that the market will move higher for a bit further time out here. Oops, that's the 30-minute chart. And move higher for how long? It's an excellent question. I don't have the gauge of how long. Instead, it would be some patterns that I would be looking for. But if, in fact, these trend lines are able to be taken out inside the ES, inside the NQ, inside of the Dow out here, price will move higher, even if it's on light volume. And, in fact, that's what, that's ideally what you want to see. We're into the seasonal cycle here where the markets will typically make a low back in October, this coming October. And if that's really the pattern that we're in, I don't have any reason to believe otherwise. In fact, I've got more information to believe that that is more the case than not the case out here. And some of these other things that we might look at that say that there's a bottom in here, really just false moves out here. Here's the Dow. Now, we know we're taking a look at the Dow. This is a monthly. Why do I have weekly? I guess I have a weekly chart up here for the Dow. And with the Dow, I do have a weekly chart. And what the Dow did last week was it closed below that trend line back in March. Now, you've got a hammer candle out here. Here's the cool thing about this. So all you've actually got to do is just prepare one side or the other. This is actually a great time to be in cash, in my opinion, because you're waiting for the market to give you a message out here. Don't listen to any of the baloney and the crap that they're feeding you on CNBC and others like that out here. Just pay attention to these patterns out here. And the mere fact that the last week that the Dow closed below that trend line, that was a problem. But here's the cool thing. We don't even have to worry about that. You just have to go back to the week before that, which was a weekly hammer candle. And that weekly hammer candle says if the low of 15,370.33 gets taken out, what I just said earlier, the former, which is that the markets would move down into next February or April, becomes more likely the outcome than any other outcome that is out there. So it's that low from 2 weeks ago inside the Dow that will truly be the key. Hope that assists you. Stay tuned, our man David White. He's going to be up next, and I'll see you on Wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.